Hello, I'm Kelly Todd and welcome to LCG's preview for the week ahead. I'll be talking to our Head of Research, Jasper Lawler, to discuss the record-breaking bull market in the US stocks, criminal cases against Donald Trump's advisors, and what government plans for a no-deal Brexit means for markets. Before that though, I'll run down some of the top corporate results to watch for this week. On Tuesday, Best Buy and Tiffany & Co report second quarter earnings. On Wednesday, Petrofac report half-year results before Salesforce reports its second quarter numbers. On Thursday, Hays reports full-year results, then later retailers Kroger and Sears report quarterly earnings. Finally, on Friday, Jimmy Choo and Old Mutual offer half-year updates. Now moving on to the economic calendar, it's German IFO on Monday, US second quarter GDP on Wednesday, German unemployment and German CPI on Thursday, then China PMIs and Eurozone unemployment and CPI on Friday. So Jasper, how long can this record bull market last?
Well, that is the question everyone wants to know the answer to, Kelly, isn't it? I'll answer it in a slightly weird way, because one thing you can do when you are just looking back at this chart for the S&P 500, which is what all these stories are about, that, you know, the low in 2009 up to where we currently stand, how many days, it's the longest ever. But and you look at an S&P 500 chart and you think, wow, this is really in bubble market territory. For longer term charts over a sort of 5-year period, I would say, it's actually better to look at a logarithmic chart. And if you do that, then actually it doesn't look quite as extreme, because it balances out the percentage swings and falls you saw in the past to what we currently see.
Yes.
So, for example, the correction we saw in February suddenly seems a lot larger historically, whereas you look at this current chart, it just looks like a tiny blip if you just use a normal price-weighted chart. So that can give you a little bit of perspective. That's something to consider technically. On the fundamental side, the price is rising and has been for the longest period ever, but actually the PE isn't. So especially recently with the tax cuts and a bit of a general pickup in earnings, the EBIT, the earnings, is rising faster than the PBIT, the price. So US markets are not actually fundamentally really overvalued. So two good reasons there to suggest it can still keep going for a while, but obviously there's lots of geopolitical risks. At some point, some of them can play into a downturn. Yeah,
of course. And now it was a rough week for Donald Trump last week. We've got his campaign advisor convicted of several white-collar crimes. We've got his lawyer reaching a plea deal to testify against him. So are we any closer, do you think, to impeachment?
I think that's the point. We are closer. Yeah. I still personally don't think it will happen, but in trading you have to sort of play on probabilities, right? And so the probability of it happening has increased. And I think what's also increased is the importance of the midterm elections.
Yeah.
If the Republicans lose control of the House and the Senate, then obviously it gives Democrats a bit of a shoe in the door to start the impeachment proceedings. Now, if they start the proceedings, that in itself can be a bad thing, because obviously it's, again, not only will Donald Trump have the distraction of this ongoing Russian probe, but he'll then have the distraction of impeachment proceedings. So all things that are kind of generally stopping his agenda, not all of which has gone through. The tax cuts has, but we still haven't seen as much on deregulation. Anything else positive you think can come out of this presidency obviously will be hampered from that happening. It probably won't ever lead to an actual impeachment. In my feelings that these current situations we're dealing at the moment is probably something that it's going to be more of an issue for him when he leaves the office rather than actually when he's the president. Okay.
Now, we've got these technical notes on plans for a no-deal Brexit. And so what do you think that means for the UK government's position in negotiations with Brexit?
Well, it basically shows us they're not that confident to have these quite detailed papers in place in the case of a no-deal Brexit. It makes sense, and obviously the way this has been presented is that they still believe a deal will take place, but it would be foolhardy not to have some sort of backup. That's the way it's been presented. It does make sense, but obviously this far in, you would have wanted to seen these just at the start, basically, and just say, hey, listen, we think there's going to be a deal, but we're going to plan for this just in case. Now that we're this far in, we're 6 months away from really the deadline when we should have a deal. It obviously just shows they're worried we're not going to have a deal. So it just actually emphasises the market concern. We saw a bit of a drop in the pound in reaction to this in the markets, but I think we've been baking in a no-deal Brexit for the past couple of months in the pound, so there wasn't necessarily a need for any extra reaction on this. We did see a bit of a drop in bank shares, and that will probably be something to watch out for a bit more in a bit more detail over the coming weeks, because the fact that there's going to be no passporting and all the disruption that brings to financial services is not, I think, entirely baked into those share prices yet.
Yeah, okay. Thank you, Jasper, and thank you all for watching. If you wish to get these videos as soon as they're released, please follow LCG on social media.